Hi, I'm Rebecca Aldridge, Managing Director of Balance Wealth Planning. So this week I've had quite a few people get in touch with me who have received some cash, or they're expecting to receive some cash, and they have specifically been asking me, should I invest this all in one go now, bearing in mind the difficulties in the investment market, or should I spread it over a period of time? So I've spoken to somebody who's received an inheritance quite recently and wants to know what to do with it. I've also spoken to a couple of people this week who are in the middle of looking at transferring their defined benefit pensions, and that transfer will come in cash. I've also spoken to somebody else who's just built up a lot of savings over a period of time and is thinking they need to invest it, but they don't quite know exactly how to do it. So when you're investing gradually over a period of time, people often call this drip feeding or phasing an investment. And the reason why you might think about doing that is because investment markets are going up and down, and so the idea is, well, I don't want to invest all in one go when the markets are really high, because I'm not going to get great value from that, but I don't yet know what the future is going to look like, so I'm going to spread it over a period of time. The academic evidence actually shows that you're unlikely to be better off from doing that. Sometimes you'll be a winner, sometimes you won't be, but there's no real secret to hedging your bets in that respect. So for that reason, sometimes I do recommend phasing or drip feeding an investment over a period of time, mainly so that you feel like you've got some control over it. You might do well out of it, you might not do, but more importantly, you feel a little bit more comfortable with the experience, and you know that if after phase 1 or 2 it was too stressful to manage, then you can just stop. What's the best period of time to phase or drip feed your investment over? Well, it kind of depends on you and on the amounts that you're talking about and what the purpose of that money is, also the level of risk that you're taking. But generally we might start at something like 3 months as the minimum period of time that you might phase an investment over, and then maybe even go on to a year or 2 years. If you've got any questions about your own personal financial planning, then please feel free to get in touch with us. We're always here to help you. You can find us at www.balancewealth.uk. Oh, and by the way, thanks to my cameraman.